Well, welcome everyone. It's a new year here. This is a Rocket Pool community call, and I'm very glad to be hosting a number of special guests from the High Protocol. As our special guest, midway through today's call, we'll be sharing the POAP that Mav just mentioned before the start of this call. And then we get a chance to spend the rest of the call with Mav going through the highlights of the biweekly update for this week, which is the first biweekly update for the year 2025. But without much more delay here, let me go ahead and introduce our guest from the High Protocol. For those unfamiliar, the High Protocol is an algorithmic backed or based stablecoin that uses LSTs as their deposit type. But welcome. Who do we have from High Protocol joining us today?
Hey, what's up? I'll go first. Kingfish. I'm with the Let's Get High Protocol as part of the DAO. I started it all the way back in the Reflexer days, 2020, with the original team that founded Rye on mainnet. A group of us decided we wanted to keep playing with like the PI controller that underlies the Rye system and make a new deployment on Optimism that changes some parameters around, make things more fun, multi-collateral, focus on LSTs, focus on other Optimism native collaterals, play with the controller parameters a little bit more, do some more fun things. And so we started Let's Get High kind of a year-ish ago almost, and it's been going great. And I'm excited to talk about it.
And I'm Reza. I'm also one of the contributors at Let's Get High. I also have been working with Reflexer that we forked for a few years before joining board with High. Excited to be here. Excited to talk to you guys about High and learn a bit more about Rocket Pool. Also, whoever just introduced us, you have the most soothing voice I have ever heard. You have a great radio voice.
Thank you. I get that comment quite a bit. And Namek, would you like to introduce yourself?
Yeah, hi. I'm Namek. I'm heading up ecosystem and research for Let's Get High.
Yeah, perfect. Very, very glad to have you here. Now, maybe you can tell us a little bit about it, especially for our community is usually based of two folks. Some of the folks on the call are going to be node operators who spend a lot of time on maybe the core protocol, the consensus layer, and then another set of the community members are those that actually hold and invest our liquid staking token product, the product of Rocket Pool, rETH. But for those that are unfamiliar with Rye and some of the genesis of the Let's Get High protocol, can you explain what your protocol is and how it works in terms of an algorithmic stablecoin?
Yeah, sure. If no one else from my team wants to tackle that one, I'll do it, just because this story is near and dear to my heart. So it requires a bit of a history lesson. And we have to go all the way back to the founding of MakerDAO. And I'm sure everyone here knows about DAI, right? But like some of us came into crypto a little bit later than others. The story of MakerDAO is very interesting, right? So they were the first protocol to come out with the idea of let's put collateral in a box, namely at that point ETH, right? Let us issue a token based on that collateral we're putting in a box. Call that DAI. We're going to say that the protocol MakerDAO values every DAI you issue against your collateral at $1, and the market, should value it the same if the protocol values it the same. That's the idea. That's the intent. Well, before late 2020, if you look at like a CoinGecko chart of DAI, the price is all over the place. The inherent stability guarantee of DAI back then was that if DAI is over $1 on the market, right? I as a debt holder, like I escrowed ETH as collateral and I mint DAI against it. I can say, hey, I will mint incremental marginal DAI, sell that to the market for greater than $1. Let's say $1.05 or whatever. And laws of supply and demand, I'm increasing the supply, right? So price should go down. And so price should reduce towards $1 over time. And inversely, if DAI is below $1, let's say it's at 95 cents, I can go, as a debt holder, I can go buy DAI for 95 cents on the market and pay off $1 worth of debt. And so like that is the implicit economic security guarantee of a like classic CDP system. However, like not to get too in the, well, I guess I have to get a little in the weeds. So like that's the simple model. What actually happened? Well, you could see on the chart that DAI price was all over the place and the market wasn't doing a very good job at quote unquote self-regulating. Why is that? Well, because there is a difference between the demand for stablecoins, i.e. everyone wanted stablecoins, that was like the new invention and you could go deposit on Yearn and make $1 bajillion. And so that has a demand where dollars were more, $1 of DAI was worth more than $1, right? Because there was so much demand for going and doing yield farming or whatever. And so that has its own demand curve. But then there's also the demand curve for ETH leverage, and that's essentially like borrowing against your ETH collateral is the demand for ETH leverage. And those two things weren't clearing at $1, regardless of those like arbitrage guarantees, right? And so what did MakerDAO do? Well, there was a lengthy discussion on the MakerDAO forums, and I'm not sure if anyone in this call is a grad student or like a doctorate student or anything, or even an undergrad for all I care. But I've always wanted someone to like who's doing like either sociology or econ major or whatever to like write a thesis on like the history of MakerDAO and like the forum wars. It's like its own little story of like the Federal Reserve. Anyway, there was a lot of back and forth. Ultimately, as we know, what they decided to do was create at first they created USDC vaults, which ultimately evolved into the PSM, the price stability module. And that was kind of the proverbial deal with the devil, where MakerDAO like ingested tons and tons and tons and tons of USDC in order to artificially sort of keep the peg at $1. So the purists in the MakerDAO ecosystem said, wait a second, this is supposed to be decentralized, this is supposed to be trustless, this is supposed to be permissionless, and I think the Rocket Pool community can sort of like align with that ethos. Like how did MakerDAO all of a sudden turn into a wrapper for USDC, and as we know today, it's essentially a wrapper for US Treasuries, which is great. Like I'm sure there's a place in the market for that, but that's not like what was originally the plan. So out of that was born two things. LUSD from like the Liquidity guys and our guys, like the Reflexer guys, were born out of that. And both of these groups came out of that and said, we can come up with a better, improved way that increases economic stability without, decreasing or increasing reliance on outside external parties that are not permissionless and trustless. Okay, so that's how Reflexer started. So what is Reflexer? And that'll tail into High. Reflexer was a CDP stablecoin, right? RAI was the CDP stablecoin, and it did sort of the same thing. If, hey, it's trading above $1, let's mint some more. It's trading below $1, let's buy and pay back our debt. However, the protocol at MakerDAO always said DAI is worth $1. But what if that changed? What if you said, wait a second, if the market is not behaving in such a way that promotes stability, i.e. we have long-term errors above or below the market price, what if the protocol itself revalued debt? And that sounds a little like, like Terra Luna, but like, let me get into why this works. So if in our example, let's say RAI is trading, 5% over peg, so $1, it's trading at $1.05. The RAI protocol, Reflexer, will say, you guys are not closing this gap, let me make a bigger gap for you. And all of a sudden it's going to revalue RAI at the protocol level at, say, like 98 cents. And so now instead of there being a 5-cent spread or a 5% spread, there is now a 7-cent spread and a slightly larger than 7% spread on that debt. And so now the market has more arbitrage incentive to close that gap. And so that game plays out over and over and over and is controlled programmatically by what's called the PI controller. And everyone go Wikipedia what a PI controller is. It's very cool. It's very mathy. But so that's how we have said, okay, we don't have to make a deal with the proverbial devil. We don't have to go grab USDC. We could keep that ETH only, and the market will regulate itself. It lasted for, it's still around. Like we never had any hacks and exploits, economic issues. Like we went through FTX, we went through Terra Luna, no bad debt, et cetera, worked great. Out of that, LSTs were born, like stuff like Rocket Pool came, right? And we were locked into our governance system that all we could accept was ETH, and we had very, very small control ability over the DAO. Like we coded ourselves out of the DAO essentially to change things to like accept new collateral. So a team of us from the original DAO forked off and did High, which allows for multi-collateral, like more modern features. Call it like Gen 3 features of a CDP protocol, but with the same economic guarantees from the original Rise system. The PI controller underpins High, and so like we've been having fun playing more games and making it a little bit more degenerate. Like you can see that High is now trading at like $1.13-ish right now, because we think it's funny that you can just hold a stablecoin and goes up. It's like a yield-bearing asset. And so there's a little bit of that going on, but that's ultimately, what we're doing at High and how we're having fun. So that's kind of the story. Let me know if you have any questions. Happy to dig deeper on any of those points.
Yeah, no, thank you very much for that. It's actually one of the best descriptions or explanations of that entire saga. So thank you very much for such a clear history on that. Now, yeah, I too had noticed that. I guess. So is there a new word for it? I guess it's stable in a sense that they don't fluctuate much. They have like a damper on their volatility, right? But it's not stable in that it's always pegged 1-to-1 with the US dollar. But so what do you call it? Do you still call it a stable coin?
You're hitting the nail on the head, because like we're kind of different. You're right. And how do we market to the world, to the crypto community, what we really are? Because we're not really like anything, right? Because we're not stable. It's not pegged to $1. And so I'm sure you guys might know who Amin is. He's kind of like one of the OG founders, a big voice in crypto Twitter, perhaps infamous. He's big Tornado Cash guy, all that stuff. Anyway, one of his crusades was calling all stablecoins pegged coins, because what they are really is pegged to $1 based on different levels of security and trust. And he's like, we're the real stablecoin. And so I think that's a losing battle to change the definition of stablecoin at this point. But what we this is not a pithy, catchy phrase, but what we are is a confidence coin. How about that? You can hold High and have a better idea than most directionally on the direction it's heading, right? And you don't have to take my word for it. Go look at the math. And so there are economic math game theory assumptions that say okay, I have a confidence of X that this is the direction the token will head in. And so that's kind of the underlying guarantee.
Interesting. Now, one other thing in kind of doing my research, did I understand that it's your protocol? It's on a layer 2. Am I understanding that correctly?
Yeah, Reza, you want to take it?
Sorry, can you repeat the question?
I got it, no problem. I just didn't want to be the only voice. I didn't know if someone else wanted to. Yeah, so we deployed to Optimism. Better, faster, transaction fees suck. I'm sure, I have almost moved my entire stack over to layer 2s at this point, and it's all because the transaction fees are just no fun. Unfortunately, L2s aren't quite at the point where we have all of the trustless guarantees of decentralized sequencers, good escape hatches, all that stuff. But at this point, if Coinbase is making their own layer 2, I think the layer 2 is the way to go. We chose Optimism because we really believed in the superchain future. We still really believe in the superchain future. And at this point, bridges are becoming pretty good. Of course, we all have horror stories from Generation 1 bridges, all the big hacks that were there. Generation 2 bridges solved a lot of that. At this point, we're on Gen 3, Gen 4 stuff, and especially what's about to be on the come with interoperability vis-a-vis the superchain ecosystem, the Optimism ecosystem. We're really excited, and we think we've picked the right home on Optimism for everything that we need to do, settlement, etc. To date, knock on wood, there hasn't been an issue on any of the major L2s that have given us pause. We hope that won't ever be the case, but we think directionally we're heading into a good place from well-funded, well-supported teams to build good infrastructure for us to remain in our home on L2 for the foreseeable future.
Excellent. And now, help me now with the kind of integration of Rocket Pool. Obviously, you're here on our community call today. Has there been an integration with Rocket Pool, or if not, what is coming down the pike?
All right, please, someone else from my team. I don't want to be the only voice.
Yeah. So from launch, I believe Rocket Pool was one of the. Correct me if I'm wrong, Kingfish, but I believe Rocket Pool was one of the first collaterals we added. So right now you can deposit our ETH into Let's Get High and mint high against it. And I'll let Namik share the details, because I'm not sure on the exact details, but I believe we just increased incentives for our ETH deposits as well.
Yeah, the DAO just voted to boost high minting incentives against rETH. So actually a 2x boost on our kite emissions. So currently the APY is like 27 something percent to deposit rETH and mint high. And yeah, we right now have almost $500,000 worth of rETH on the platform, and we're looking to increase that and create better connections with the Rocket Pool community.
Yeah, and just a little bit more color on that, because that's kind of an eye-watering APY, right? So that's probably going to be for the next, like the DAO voted to boost those rewards for at least the next 2 months. We're trying to make a big push for LSTs right now. And so, we knew we were doing this community call. We wanted to give a little something to the Rocket Pool community and just boosted those rewards. I don't think those are going to be, that's obviously yields at that point across any platform are generally unsustainable. But we really think it's a cool way to juice it a little bit for anyone in this community who wants to go play around, to go see what's going on at Let's Get High. So to be eligible for those rewards, just bridge over any rETH you have anywhere else. Bridge it to Optimism. Come check us out at letsgethigh.com. It's a pretty cool experience. We have a very interesting branding, but it's a regular CDP platform where you make a vault or safe, whatever you want to call it. Deposit your rETH, mint some high against it, and play around with it. Like, there's some interesting LP opportunities. You can just hold it if you want. I wouldn't advise against selling it for USDC or something right now, given the redemption rate that we've talked about. Like Direction Coin, right? High is generally going to appreciate right now. So I wouldn't be like having high liability and owning USDC assets or something like that. You're probably going to lose out on that. But when you net all of the incentives together, you could probably do something pretty crazy. But hey, why not have some fun?
Yeah, and we're also gonna start also incentivizing a high rETH pool on Velodrome as well. So there might be some interesting strategies there for anyone who's using high.
Yeah, that was going to be one of my next questions is what are the integrations that you have with High? Like once somebody, if they decide to take advantage of this opportunity and they deposit rETH, they mint High. What are their options for utilizing High?
So right now we're mainly integrated with Velodrome and also Beefy on top of Velodrome. So they have auto compounding vaults. And so we've partnered with Beefy to offer some auto compounding vaults with High. So you can either go to Velodrome itself. If you're interested in the auto compounding vaults, you could also check out Beefy. And like I mentioned, that pool that we're going to be starting is also going to be co-incentivized by Velodrome as well, because there's a big push across Optimism for more YBAs. So they have like an OP incentive program. So you'll be able to, earn some decent rewards. And, as Kingfish said, to avoid, maybe selling, you can look to LP. And then we're also going to be I can't give like a time frame yet, but we're also going to have Pi as collateral soon. So that could also take away, from the pressure of that redemption rate. So that'll all be coming, hopefully within the next month or so.
Yeah, he's letting the secret out the bag. We've been talking to two different like money market type dApps, like I think of like an Aave type situation, that are either released right now or releasing very soon in the optimism community, and we're doing our damnedest to try to get high on there as collateral. Talks are going well so far, so fingers crossed. But that'll unlock a whole other money Lego for high users to play with as well, and we're really excited about that.
Yeah, perfect. And then you also mentioned, I guess, as part of your incentive, there's a kite token. Can you explain what that is?
Yeah, sure. So there's what Kite is now, and it's our governance token. It derives some economic value from buyback and burn, which is like the high treasury builds the high. Well, I shouldn't say it's not the DAO treasury. The high protocol builds a balance sheet buffer of high from stability fees and liquidations. Sorry if you get liquidated, but it does make the protocol richer. When it gets to a point when that bucket fills up, it gets to a point where it will auction off some of that high and buy back Kite. And so there's a buyback, and it's sort of like a synthetic dividend, stock buyback type thing in there, plus all the governance rights. And so that's what kind of Kite is today. However, I think this document is public, right, Namik? So I can talk about this. Kind of like the V2 that's also in the background for Kite. Actually, Namik, you do it, because I don't know what's been released public or not public, and since you wrote that document, you should do it instead of me. I don't want to reveal stuff that's not revealed.
Yeah, so most of it is so there's like three phases to this new update that we dubbed the high wheel effect. And for phase one is what we're working on right now, and that's going to introduce kite staking. So essentially, you can take all of your kite emissions that you earn on high, you'll be able to stake it, and that's going to give you revenue share from high protocol, and also it's going to give you a high booster, which will essentially boost your high minting incentives on like per collateral type. So that'll be hopefully, it's always with giving timeframes or whatever, but we're about to send it to audit. And as soon as we get it back from audit, kite staking will be live. So it's a good opportunity. If, you're trying to maybe use high, you could accumulate some kite before kite staking comes and participate in that. And then we have two other phases that will introduce some other functionality and features. When it comes to kite staking, there is this idea of surplus in the protocol that comes from liquidation auctions. And so that surplus in phase two will actually be going to kite stakers, and kite stakers will act as like a collateral type or like a safety net for the protocol. And so then that'll be able to give kite stakers, increased rewards on top of that as well. That's mostly the updates on Kite itself.
Excellent for that. Well, I certainly invite any members of the call, if they have questions here, to either unmute and ask them or post them in trading. But while we wait for anybody with questions to come forward, is there anything else about the Let's Get High protocol that we haven't discussed yet on this call that you feel is important for members of the Rocket Pool community to know?
Sure. Well, first, I will say, besides what we've laid out on the stuff we're working on publicly, there's also a bunch of stuff we're working on not so publicly that I wish I could say more about, because it makes me very excited. And I would just say, like, if you're interested in what we've said so far, please stay tuned for more updates. Probably 2 to 3 months out, if I had to guess, based on our pipeline, on those announcements. Secondly, I understand that, like, this is sort of a hard protocol for, like, someone to, like, just, like, look at it and be like, all right, what the heck is going on with this stuff? Luckily, there's been some really great resources that have been written by the guy who came up with dank sharding, wrote a really good blog post on Rye and High. Vitalik has written about us before. There are some primers out there. And so if you're interested in this idea of like, wait a second, I heard the word algorithmic and I just had like PTSD flashbacks to like Terra Luna. And so I just don't trust that word anymore. Unfortunately, like I get it. But I would say like what we're doing is not like the economic security build up, like as someone with an economics background, is like quite impressive, and like it has the same, if you're okay with like the original MakerDAO system, you should be okay with this. And in fact, in a lot of ways, this could be expressed as being more anti-fragile than that. So like I get it, it's kind of a big lift, but we love nerding out over this stuff in our Discord. So hit us up or ask us questions now, and we can keep talking about it or whatever you guys want to know.
Yeah, is there Jasper's got a question here. Go ahead, Jasper.
Yeah, I've actually got a couple here. Let me just apologize for the voice. I'm currently ill with the flu. But I love High. I love Rye, Reflexer, Amin, the whole cohort. A few questions, though. One of the issues that plagued Rye was its inability to adapt to outside influences on a stablecoin, even though it's not technically a stablecoin, but stablecoin yields, like the fluctuating treasury yields, fluctuating DeFi yields, and how that ended up sort of impacting the redemption rate for Rye through the controller, the PID controller. I'm curious if High, you think, will be better able to deal with fluctuating ecosystem interest rates. And then my second question, if you want to answer that first, actually.
Yeah, sure. First, super into your EVM Maverick. I have one myself. I'm on ETH Finance back in the day under a different username, so I'm sure we've run into each other before. Yours is cooler than mine, though. Anyway, great question. And so I'm going to dissect your question into two parts. One part of your question is about like what like market rate of return and how like attractive Rye/High is dynamic or indynamic, I don't know if that's a word, compared to those rates. And the second is kind of like capital efficiency and scale. And so those two things together is kind of like the root of the question, if I'm hearing it correctly, is, how do we remain attractive? In its current, frankly, my opinion is, in its current form, the protocol is not set up to do that in an effective way on a short-term or even like a medium-term basis. It's what I described earlier, is that like these like Generation 1 CDP systems where we're not taking outside capital, right, are sort of bad at reacting to market shocks. Ecosystems in general are sort of bad at reacting to market shocks. That's why, like, during the COVID pandemic, when Jerome Powell had to bail out money market funds, it was the exact same reason, right? And remember what I described earlier is that at the end of the day, high issuance is really it's a demand curve for ETH leverage plus whatever incentives the DAO puts on top. And so we can adjust that demand curve to an extent, but not as fluidly as the demand curve for stablecoins. So in its current form, like, it is what it is. The DAO has the ability to play with incentives, but that's about it. But what could we do? And I don't care about this one because this one's my brainchild. So, what could we do? Well, the system that I've pinned out, we haven't coded any of this yet, or like it's kind of proverbially next in line until something else comes. There's two things I would do to solve this issue. The first one is I call it the redemption module, and that is if you were a CDP owner, like you have a position of escrowed collateral with debt minted against it, high or high, whatever. Well, it's probably going to be high because we're going to build it for high. And you can toggle on a button, right? And that when you toggle on that button that says, at any point in time, I am willing to trade $1 of my debt for $1 plus, or minus a multiple, minus a small multiple. Like, I'm willing to trade $1 of my debt for like 97 cents of my collateral. And what that will allow you to do is arbitragers, instead of having to take duration risk, right, on like, oh, the redemption rate's positive, I'll go buy some high, they can trade a duration risk for an immediate clip, like a MEV bot type situation, where they can say, oh, high is trading right now at this AMM for 3% plus 1 penny, and I can redeem it for 3% right now and collect that penny. Well, all of a sudden, like different people setting different toggles on their safes in this redemption module will allow for like instant expansion and contraction of the high debt supply that will be much more reactive to these overall, like to the market price of high, which will like immediately impact the redemption rate, right? So that's one side of it. And the other side of it is when high is trading the other way, I want to create a high staking module, right? That basically says when when the price of high is below, or when market price is below redemption rate, like we don't want any more borrows right now. That's going to increase supply, decrease price even further away than what we want. So instead, the green light on the high staking module turns on. It becomes a high sync. Everyone gets the redemption rate plus some down incentive yield. And those two things combined kind of butterfly both sides of like error in the system and would increase like dynamism to the point where we are now, where the money supply and rates are reacting much more closely to like quote unquote real-time rates of return in the market. When is that? I don't know, but like call that, next in line after the next in line, hopefully.
Let me, Jasper, if I could, let me just interrupt just briefly here with a short PSI announcement here. It's POAP time. So before Jasper asks his second question here, for those that want to claim a POAP, you can do so using the POAP Home app. Today's code is get-high. Get-high, and high is spelled H-A-I. So the POAP code is get-high. And then with that, Jasper, your second question. Or follow-up.
Yeah, so Kingfish, I love that answer. I think one of the issues with RAI was that arbitraging it was like one single market, and now by introducing more complexity and nuance, you should get a more efficient system overall. My second question was on the nature of immutability. So one of the big things that drove RAI in a certain community was that it was immutable. One of the big things was the PID. It was the first PID, but it was also an immutable PID in action. What are High's goals towards approaching immutability?
Reza, you want to take that one, or anyone else from our team? Hearing none, I will take it. All right, so you were right. RAI was, and that's like, frankly, I cared more about that in the beginning of my journey in RAI than I did about the PI controller itself. I was like, okay, those smart guys made a PI controller, that's cool. But I was so pissed off after Maker and them just grabbing USDC that I was looking for. I was like pissed off with the human element of governance. I was not a huge believer in like the quote unquote wisdom of the masses and the decisions they made at MakerDAO to essentially like pump Maker price is the way I looked at it, right? And so that, you're right, like that was super cool with RAI. I is not like that at all right now, and that was an active choice. So the high governance essentially has God mode still on almost every part of the protocol besides totally just walking away with everyone's vault money. We can't do that. But I think that the reason we've made that choice is because we designed High to be this kind of like beta for what a PI controller looks like in V2. And we launched it at a point in time where L2s are still very new. Bridge technology wasn't mature yet. Like all of this stuff, like we launched on an ecosystem where things are changing very quickly. And so we made the choice like, hey, let's keep governance flexible such that we can react to all of these new standard wars that are actively occurring, to be in such a place where we don't repeat the mistakes of, well, I shouldn't call them mistakes. We don't make the same trade-offs as we did with RAI, where like no one could have seen LSTs coming for RAI, right? And so who knows what those new big like things are going to be in this L2 ecosystem, and all of the promises that like super low transaction fees and super fast settlement might enable from a technology perspective, that allows us to be like, okay, now we have found really good product market fit. We're at a point where we can shut out governance from doing stuff governance shouldn't be doing anymore. And now that's like and I understand as I say that, that's also the promise of, yeah, we have powers now, but we promise to take our powers away at some point in the future. Like, that's only as good as like trust, right? And especially trust in the future. So I understand why that might not be a super satisfying answer, but I hope you understand why our attitude has shifted for the high deployment.
Yeah, no, I absolutely understand. I mean, Rocket Pool's in a somewhat similar situation as this gradual approach towards ossification while you're dealing with a constantly changing Ethereum protocol and environment. But it is good to always reiterate one's stances. But thank you. That was the end of my questions.
Yeah, and I guess my last comment I forgot to say is, like, Rye still exists, right? And so if you're someone who says, like, hey, cool, but, like, not for me. I want ETH only. I want hard ossification. Like, I don't want humans making decisions. I don't trust humans. I want the robots. Like, you can go do that. And so that was also part of our thinking was, we're not taking away features from people, we're just adding to them. And so, like, the democratization of decentralized finance is supposed to be about everyone making their own decisions. And so that decision's still out there for those who want to make it.
And I think it's worth noting that Rye is working. A meme posted an image showing Rye tracking global currencies, and it's somewhere in the middle, very middle compared to global currency. So it works for what it's supposed to do now that it's found its sort of like bottom out point.
Yeah, and that raises a good point, which I always try to challenge myself to, which is like, especially like I'm an American, right? And so Americans have a challenge of always they think the rest of the world's America, but most of the world isn't, and most of the world doesn't care about the U.S. dollar. It has their own currency, and so that's a super interesting point where if you look at Rye versus like everyone else. Sure, it's not where the dollar is, but it's like doing right in the middle of the pack of the world's currencies, and I think that's pretty cool.
Well, excellent questions, Jasper, and to our guest, Kingfish, Namek, and Reza, thank you very much for joining us here. If folks want to learn more about Hi, how can they get in touch with you? Do you guys have a Discord or a website? Where should they go?
Oh yeah, we have all the things. No, go ahead, you got it.
Yeah, our Discord is Let's Get High is the link. So you can just do discord.gg/Let's Get High is the invite. So come on by and come hang out and get high with us.
Perfect. Well, again, thank you very much for joining us on today's call here, and be sure to claim the POAP code if you haven't. There's a little bit of time left in the claim window. The code, once again, is get-HAI, H-A-I. And I see, thank you, Halilulu, for posting the Discord link in the trading channel. That's our main community channel. So if you're listening to this call on replay, the Discord link, again, is Let's Get High. Thank you both, and all three of you.
Yeah, thanks for having us. It's been great.
Yep, thank you.
Thanks, everyone. All right, well, we'll transition today's call over to and invite Mav to come back up here. And this is always an exciting week when we have the bi-weekly event. And even though it's just the beginning of 2025, a lot has been happening. Welcome, Mav.
Hey, Ken. Hopefully it's not too echoey, is it?
Just a little bit of echo. I'm picturing you in an empty, cavernous place here. You're relocating to a different part of the world, it sounds like, and sounds like you're sitting in a little bit of a cave, but it's not too bad.
Good guess. Maybe if I talk a little bit quieter, it will help. But yes, empty apartment, echo.
Well, congratulations on that. But maybe let's start off here a little bit in the bi-weekly here, and I guess we always start with just some protocol updates and statistics here. The RE supply declined over the last 2 weeks, down about just a little over 1%. The pending active mini pool count, I guess folks always point out these always increase, right? But it's up a little bit at 0.6%, and the node operator count increased a little bit, about 0.4%, but yeah, it sort of still seems to be a little bit maybe in the doldrums a little bit. But what's your sense? Are we growing yet in terms of rETH after the large 7.0 boost here, or where are we at?
Yeah, a bit of a trend continuation here in terms of the past few bi-weeklies, and I guess that is probably to be expected over the holidays. Obviously there are a few things coming along, and recently as well there were a few noteworthy events when it comes to rETH and mini pools. Obviously, first of all, worth pointing out that the mini pool count is probably still weighted towards a growth in the pending mini pool, so there's a bit of a queue there, but it does seem like one large entity has launched quite a few mini pools recently. This was, I guess, somewhat of breaking news, at least too recent to make it into the bi-weekly update. But yeah, we do. There was an announcement from a company called BTCS. So if you're on X and you're following the Rocket Pool account, you can scroll down and there should be a retweet recently about them launching a few mini pools. So that's kind of helped to further grow out that pending active mini pool count. But of course, at least for right now, it is our supply that we're paying more attention to. And yeah, there's a couple of things to talk about here. One is, as we might touch on later, the STAR initiative, which actually the DAO is hiring for an overseer for, so that's helping to incentivize rETH growth. We also have Alpha Growth. We've got a Sadbrook director from Alpha Growth here in the call. They're lending their support with a few initiatives in the works for stimulating rETH demand. And then Grant has been busy on the ecosystem side, talking to different companies and protocols to similarly stimulate that demand. We have seen some, I guess, positive trends, at least in terms of some integrations out there, again, that we'll touch on slightly later in the bi-weekly, where people are using rETH within DeFi applications. So that is always a good sign, because if a new integration opens up, or if caps are increased on a certain integration, or if incentives are increased, and we do see that being taken up with rETH, that is a good sign that there is still interest in the liquid staking side. So hopefully all of these trends and everything going on behind the scenes can come together to help out on the rETH side. And also one final point, of course, is we did see the mysterious NSSO, I think it was, company based in Singapore come along and mint a whole lot of rETH and then go ahead to sell it on a secondary market at a discount, which is puzzling to say the least. But that kind of big one-off event may have shifted the numbers around a little bit. I think it was the last bi-weekly update we saw a spike in rETH minting, but then of course as that is sold off and the discount is increased, it's unlikely to result in people minting so much rETH, as opposed to buying it on a secondary market and helping to offset that increasing discount. So yeah, a lot of things going on, and some we'll touch on a bit later as we go through this bi-weekly update.
Yeah, perfect. Yeah, that's kind of a good rundown through it. And I thought about, well, maybe we should just kind of bounce around a little bit here. But maybe I'll just cover just two of the front ones here, because they're very simple. One of the things is for those that are choosing to be a node operator, I always think it's a pretty easy walkthrough and setup. But there's actually now a script that makes it kind of almost like a one-liner to set up and launch a Rocket Pool node. And so there's a link to that script in the bi-weekly for those that are interested. And I actually don't know. I mean, it's certainly easy and makes it straightforward, but I actually think as a node operator, it's very helpful to walk through the documentation and actually kind of learn what each command is going to do, so you at least have a mental concept of it in your head. So I don't I don't quite know how I feel about that. Maybe I'm just old school, but for those that need to do deployments, or are just maybe a little daunted by the number of commands needed to walk up, even though the documentation is good, there's a new script for that. And then on the R&D side, if you haven't seen it here, Langers had shared an update recently, both in just a quick one in trading, and he's due to issue the kind of status report, the quarterly status report next week. So that should be coming out. But on the first community call of the year, if you haven't heard it, Langers spent the better part of an hour with us just explaining everything the team has been up to through the holidays, and a little bit about kind of road mapping going into the first quarter and first half of this year. So I highly encourage you to take a look at that. But Mav, you mentioned the hiring that the DAO is hiring for a overseer of the star, I guess it's going to be. Can you share a little bit more about that, and if people what is it, and if people are interested, how do they apply for it?
Yeah, first of all, it is a pretty great job title, isn't it? Before we touch on that, I would just add on to your point about the script with the disclaimer to encourage people, if they are looking at using a script, as with any script, you should check it and don't blindly trust it. But yeah, it looks like some great work from a community member that put that together. And yeah, to your point, as at least for now, not a node operator, I defer to your judgment as to the usefulness. Maybe if someone is experienced and for whatever reason they're going through the setup again, then maybe it would help. But yeah, I think your point makes sense that at least for your first time around, you'd want to learn by doing. So Star Initiative Overseer. So the Star Initiative was came out of the DAO's rETH Growth Incubator, and this is a part-time role. I'll first say that if you are potentially interested, make sure you have a look soon, because the deadline is coming up in a couple of days. But this is a part-time role, around 8 months, potentially more, and it's essentially to manage this initiative. So process implementation, record keeping, and just oversee the Star Initiative, which aims to incentivize and grow the rETH supply. So if you're listening to this call, there's a good chance that you have at least some kind of background experience that would make you a good fit. And it is, of course, a remote role. Other than that, I think if someone is potentially interested, I would go through and read Schifrin's very comprehensive post that is linked from the biweekly update if you look at the governance section a couple points down.
Yeah, and it seems like it's going to be a very needed position, because the whole Star Initiative, and kind of my short synopsis is, it's a way that any community member, or any member even outside the community, if they can attract large mintings of our product, rETH, our liquid staking token, those individuals can earn a commission. And so the coordinator of the STAR program is just trying to track who are the representatives or the outreach members, and kind of what protocols they're pursuing, and just add a little bit of coordination so we don't have multiple members kind of chasing the same DAO or the same company or the same protocol, whatever the entity is, and just add a little bit of organization to it for it. But it seems like an excellent opportunity, and there's a link to the job description, as Mav says, in the biweekly here. A couple of things, GMC discussions, I'll maybe group these together here. There's a discussion post about membership funding, and maybe reassigning the split between the IMC and the GMC. It's a kind of a multi-factored conversation, just for trying to account for the amount of time that it takes to serve on the GMC versus the IMC, and then also trying to remunerate the the sharing of the PDAL split between the IMC and the GMC. So there's a discussion and kind of a request for input about revising the GMC split that's there. If you're unfamiliar, the GMC is the Grants and Management Committee. They do a rolling rewards opportunity, or grants, bounties, and retrospective opportunity, where individuals from within the community or outside the community can apply for funding for initiatives, and they do that through a round, and we are now about maybe a third of the way through what's called round 21. The application period is closed, but if you're interested, you can just keep an eye on it, and round 22 will open up in about a month or a month and a half. They seem to be on basically a 2-month cycle, I think it is, roughly. Somebody can correct me if I'm wrong on that, but they open up. But definitely take a look at them. You'll see them. And the GMC also produced its latest report, and there's a link to it with the Treasury report that updates the spending, the grants, and the awards, and so forth. So the GMC has been very active, thanks in a large part through Schifrin, who is the GMC administrator and keeps that a well-oiled machine. One other item I see that was interested in the biweekly was the POAP. This one was created by Honolulu, that was used to, by purchasing the POAP, it was used to help fund the on-chain voting initializations. And I think we talked about this just briefly on our last call, but I saw a post here, and thanks in a large part through Honolulu here, that I believe that we reached 100% initialization. I guess I'm asking that for trading just to confirm that, but I saw some beautiful graphics that he put together with lots of green check marks for all of the active nodes, and it looked like we'd reached 100% utilization. And perhaps maybe I recall WAC mentioning that on a rocket fuel here recently.
Honolulu is typing. But yes, the POAP campaign was successful. They reached their target, and we are all good now as far as the initialization is concerned. But let's just wait for the official update from Honolulu here in trading.
Yeah, and I think I was kind of scrolling fast through trading at one point and saw maybe that he had a beautiful gas window of like one point something Gwei on a lot of these transactions. So I'm sure that helped reduce the or made the POAP generated funds go quite far in that. But I guess Mav, what is that? Everybody's asking Honolulu to type faster here. Yeah. But yeah, excellent here, and I guess it was Romana's script that had pulled those check marks from. But I guess, Mav, so what does that mean for us now? We're fully in the transition to do on-chain voting here. Is that I know Langers had explained it a little bit beforehand, but what's the next step? Is it kind of clear in your head how we start making this transition to, I know we're always going to do snapshot votes for kind of the more signaling, or, I actually think we're calling it signaling votes now or whatever, but for more the protocol settings and so forth, it's going to move all to on-chain voting. Is that correct?
Yeah, that's right. And it has been a long time coming, and this functionality has come out of the Houston upgrade, if you remember all the way back to last year, and then the subsequent hotfix, which resolved a slight issue to make sure that the upgrade behaved as intended. So yeah, it'll help to give the DAO a higher degree of autonomy and decentralization and all those good things. So yeah, it'll be good to see that coming together in the future weeks and months.
Yeah, perfect. And Honolulu writes in trading as we're on the call here. He says the idea is to write a tiny RPIP this week to set the quorum parameters to the right values, and then we have to change to the ODAO inflation share lined up as the first on-chain vote. The settlement poll, he reminds us, is already up on the forum, so you can you can input early on in kind of the settlement poll. If you recall, in Rocket Pool's governance model, we do need settlement pools before we bring things to either the signaling vote or the on-chain vote, but it looks like the change to the ODAO inflation share is lined up here as our first on-chain vote. So this would be excellent. It's going to be, as you said, Mav, quite an achievement once we get there, and I think really puts kind of a high mark in terms of Rocket Pool's efforts to be a fully decentralized based community, even with our governance model here. Excellent. I think we covered most of the things in terms of governance here, and then maybe we should move on to integrations here. Mav, you want to cover a few of the highlights from the integrations?
Yes, just give me 1 minute. Okay, yes, integration. So we've got a couple. The first one is from Hermes, or however it's pronounced, which is a DeFi protocol. I believe liquidity aggregator would be the most accurate term. Anyway, they granted the IMC a voting allocation to direct emissions. So that very generous gift was accepted by the IMC and is used to direct emissions towards rETH liquidity. And then we also have the return of Euler, which you may recall was one of the large lending borrowing protocols that did unfortunately suffer a bit of an exploit, but they are back and they have support for rETH. And the link from the biweekly update, I believe it takes you to a post from Jasper with a screenshot of the different rETH options. And if you are in the market to lend and borrow rETH, there are some quite high APRs available, at least for now. We obviously all know how volatile those can be and are not necessarily guaranteed, but great to see Euler come back, and great to see rETH integrated. Yeah,
I do have to commend that team for as strongly as they were kicked down in the first hack. It's quite a testament that they've continued to work with the protocol and seem to be on a pretty good recovery mode here, and kind of a pretty good Phoenix rebirth here. So my credit to them. And then something near and dear to your heart, the media and marketing section. What out of that section would you like to highlight today, Mav?
Let's start off with the first one. That's probably a good place to start, which is an incentivized leveraged rETH campaign, which is on Optimism, and it's through a protocol called Contango. So a little bit to unpack there, but the TLDR is an opportunity to have leveraged exposure to rETH. So what that means is, of course, like pretty much any use of leverage in DeFi or TradFi, if you're a bit of a risk taker, you can potentially earn higher rewards, but also there is an increased risk there of potential liquidation. So might be something exciting for the DeFi experts to check out. Although every time capacity was opened up in that campaign, it was used up quite quickly. So I'm not sure if there is actually any space available right now. But as we kind of mentioned towards the start, it's a great sign of rETH continuing to be used in DeFi when these integrations are available. And speaking of, that is a good segue into the second point, which is an excellent new Rocket Pool DeFi Integration Explorer page, which has been launched. So this was a DAO-funded initiative, and we'll have a bit of co-marketing going out about this in the coming days. But it's a great place to go and have a poke around and see how you can use RPL and rETH in the wider DeFi ecosystem.
Yeah, perfect. I actually really like that product. It's interesting because, for those that know me, I'm more on the node operator side of the house, but it was very useful to go explore and just kind of see the extent at which rETH especially has been integrated into the DeFi ecosystem, and I think that page really highlights it quite a bit. Really interesting to see the early kind of products and efforts in Rocket Pool's kind of now new focus on really focusing on rETH minting, right? We kind of knew going into the early Saturns here that the protocol would shift. Instead of being a node operator limited protocol, we're really now just a protocol that is maybe the word limited isn't the best word, but is really just rETH constrained, right? The growth of Rocket Pool now resides or is entirely dependent upon one thing and one thing only, and that's just the demand for rETH. And so I think we're starting to see a shift in a lot of the GMC efforts, a lot of the marketing efforts, really to just focus on the core product, or the core product that Rocket Pool produces, which is rETH. I think this is kind of a really good spot to be in, most certainly, and I think it's really neat to now just be focusing, instead of kind of swinging between these two extremes, really just starting to focus on one core marketing message and one core focus here, which is rETH integrations, rETH production, rETH adoption, everything rETH. And so it's really neat to start seeing some of these early initiatives starting to come to fruition.
It sure is.
Anything else in the media and marketing topic that you want to highlight?
Maybe another couple points to quickly touch on, which is ETH Staker put out a self-assessment staking widget, which featured Rocket Pool, which was nice to see. And if you want to hear Wack and Jasper chat about a recap of 2024 and their predictions for the rest of 2025, there's a link there to a Weekly Orbit episode hosted by Pat. And I think that'll do it for the bi-weekly.
Yeah, perfect. And then one last topic, maybe before we close out today's call here, is I saw in the announcement that you put in protocol, in addition to covering some of these topics from the bi-weekly, it also kind of had some more updates about ETH Denver, and that you're soliciting input for maybe a list of individuals or a number count of individuals, so we could do a Rocket Pool meetup at ETH Denver. Anything more you can share about ETH Denver and the team here?
Yeah, that's the one. So we've started booking flights and hotels yesterday, and the entire team will be in town. We won't be having a booth this time at the main event, so we may be spread out across different side events, but we will definitely be doing some kind of community meetup, likely along the lines of what we did last year, rather than a full lift off. Just a chance to get together and chat over a bite to eat and a drink maybe. So yeah, please give us an indication of your attendance. I know a few people are on the fence about attending, so that'll help us to get an idea of what kind of venue to book, and looking forward to seeing everyone in Denver again.
Yeah, I'm absolutely excited about that. Was able to kind of rejuvenate over the holidays here, and ETH Denver, the hype is starting to come up pretty big. And yeah, my advice, if you're listening to this right now, even on the fence, There's, it's a zero cost ticket for ETH Denver, really. And so if you're on the fence, my encouragement to you right now is go to the ETH Denver ticket portal. They're doing these and kind of rolling outputs. Go ahead, file the application, get your ticket and pass, just to get a ticket into it, because the crowds this year are expected to be quite large. You can then make a decision about attending, but it does look like a great one. If you've never been, I would highly encourage. If you've been before, I think this one's going to be real interesting to see, as just a lot of dynamics are changing in the ecosystem, both internally and then kind of regulatory wise here in the U.S. That I think it's going to have a different feel, a different sense, different attitude, and there's lots of information I think that's going to be conveyed during it. And if you've heard me before, I do highly encourage if you can, attend the few days right before ETH Denver, those lead up days, the Monday and Tuesday. There's so many just very high quality side events that happen right beforehand that you don't want to arrive just for the main event and think that's all there is to ETH Denver. It's a layered conference. There's lots going on those beginning days, in side events and during Battle Week, and a little bit less crowd, so you get a little bit better signal to noise ratio than trying to deal with some of the just some of the kind of mad rush that sometimes occurs during the main event. But it's Mav. It's going to be great to know that the team is there, and glad to see this coming to fruition here.
Yeah, it's always good with these kind of events where pretty much the entire industry is in a single place. Makes it very easy to set up meetings and discuss with people IRL. So also, as you point out, potentially big changes in the US, which obviously affects the industry a lot. So I'm really looking forward to Denver, and it's just over a month. We'll be starting to get on our flights, and this year I will try not forget my lip balm. Very high, very dry place.
Yeah, that's the one product I always tell people visiting Denver for the first time is bring some chapstick with you for your lips. You'll by the second day you'll definitely know what I'm talking about. All right, Mav. Any other things as we kind of bring today's call to a close?
Don't think so. We haven't quite locked in a guest for next week's community call. There are a couple of options. One is, of course, Liquidity, who are in the middle of their V2 launch. We'll get them on at some point, but not sure if next week is looking like the best time for them. So keep an eye out in the event section once I get something confirmed and added. And yeah, other than that, I think we are all good.
Yeah, perfect. And tell Langers we're all looking very much forward to his quarterly summary here. And yeah, it seems like things are looking very positive here with Saturn 1. So any news he can share with the community on that would be greatly appreciated as well.
Yeah, for sure.
All right. Well, for everyone listening, it's been a pleasure joining you again weekly here. And if not, I'll be chatting with you all in trading. But everyone else, have a great day.
Sounds good. Thanks, Ken. Thanks, everyone. Catch you later.